India's power sector is not just about electricity. It's about energy fueling growth, innovation, and everyday life. From the lights in our homes to the massive industrial engines driving our economy, the power sector sits at the heart of it all. With India's growing focus on infrastructure, renewables, and energy access, this sector is poised to play an even more crucial role in the country's journey ahead. In light of this, Groww Mutual Fund is happy to introduce two new schemes that aim to help investors participate in this evolving opportunity. The Groww BSE Power ETF and the Groww BSE Power ETF Fund of Fund or FOF. Both these schemes track the BSE Power Index, a benchmark that includes companies in power generation, transmission and distribution. The NFO period for both schemes is open till 1st August. To help us understand this theme better, we're joined by Mr. Dinesh Iyer, Head of Product at Asia Index Pvt Limited, which is a wholly owned subsidiary of BSE or the Bombay Stock Exchange, and Mr. Mukul Parikh from the Product and Content team at Groww Mutual Fund. Dinesh will walk us through the index and the sector fundamentals, while Mukul will help connect the dots for investors. Let's get started. Welcome to this session on understanding the BSE Power Index. Dinesh and Mukul, pleasure to have you on board.
Thanks, Karunya. Happy to be here.
Thanks, Karunya. It's a pleasure to be part of this discussion.
Before we dive into the BSE Power Index with Dinesh, Mukul, could you first give us a quick overview of India's power sector?
Yeah, 100%. So, because I knew that I was going to be on this discussion. I was discussing this with a friend of mine, and he said that power is very important for modern technologies. And what I realized was that while he was right in his optimism about power being critical to modern technologies, power is very critical to modern life, from healthcare to manufacturing to education. Power touches pretty much everything, and even sectors, let's say like transportation and agriculture, one of which was very oil and gas dependent, the other one was very labor intensive, over the years have moved to becoming more dependent on power. So on the transportation front, we are seeing an EVification happening. On the agriculture front, we are seeing a lot of mechanization happening. So power is very critical to modern technologies, but it's even more critical to modern life. And with that in mind, I realized that we need to look very specifically on how it has transformed as India has evolved. So we started looking at the consumption of power and the trends with respect to India's GDP. And we saw that as GDP has grown over the past few years, so has power consumption. In the year 2000, when GDP was about $500 billion, India's power consumption was close to 300 terawatt hours. By 2023, India's GDP had moved almost 6 times to $3.6 trillion. At the same time, power consumption also grew about 5x to 1417 terawatt hours. So GDP and power consumption have kind of moved in tandem over the past 2 decades or so. And this is not a trend that we see in a particular segment or a particular part of the economy. All major segments, say it domestic, be it commercial, be it industry, be it agriculture, have seen a growth of multiple times when it comes to electricity consumption. So on the domestic front, we've seen a 4x growth, 4.2x specifically. On the commercial side, we've seen a 4.5x growth. On the industry side, we are seeing a 3.3x growth. And on agricultural side, also a threefold growth in power consumption between the year 2000 and to the year 2020-21. So that's the consumption side of the story. Now moving specifically to generation, because as the demand has grown, so has the need for generating this power. On the generation front as well, we are seeing a growth. Say in the year 2000, we were generating close to 570 terawatt hours. By the year 2024, we were generating almost 4x, 2058 terawatt hours. So while consumption has grown, so has generation. And generation is driven by multiple factors. So there are those fossil fuels that we have, there are the renewables, and then there are other sources of power generation. All these have seen growth in terms of their generation over this time period. But very specific growth has been seen in the renewable sector, which has grown from about a good 70 terawatt hours to over 370 terawatt hours. So there's been a 5x growth in terms of power generation, specifically from renewables. And this can be seen in the two major sources of renewable power. One is your solar and the other one is wind. So when it comes to solar, we were practically generating nothing till about 2010. And now solar has become a major part of the power mix. And today the installed capacity has crossed 100 gigawatts. A similar trend has been seen in wind as well, where we were hardly generating anything. But as of today, wind's generating capacity is about 50 gigawatts. So these two combined are contributing about 30% to the installed power capacity in India. And this is clearly evident in the kind of generation we are seeing. So India, as of 2025, is the third largest power generator in terms of renewables. The only two countries above India are the US and China, your standard large economies that have huge installed capacity in renewable. Another interesting point here is that while renewables capacity has grown, this has been reflected in the cost of power generation by these sources. So today, very interestingly, the cost of generating solar power and wind power is substantially below the cost of generating power using coal, which has been here in existence for 100 plus years at this point. So we are seeing this trend not just in terms of capacity, but also in terms of the cost of generating power. So there's a huge demand push that's come, which has been matched by the power generation capacity in the country. And now this nation, in the last 10 years, has moved from a nation of chronic power shortages to a nation which was able to meet its peak power demand as of June 9th, 2025. So this is the first time we met the peak power demand in this country. And this is a huge achievement because we often relate our power sector with one of shortages and one of power cuts, but that trend has been reversing over the past few years. So today, not only are we able to meet our peak demand, as our generation capacity has grown, we are trying to now position ourselves as a regional exporter of power in at least neighboring states as well as even nations we don't share a border with. A lot of people might not be familiar with this, but India actually has about 2% share in the global power trade, and we exported about $1.5 billion worth of electricity in 2023. So, I mean, that has been the story of power. It's a story where demand has grown multifold, which has been matched by generation capacity, and a country that was often associated with power cuts and chronic shortages has moved to surplus and is now moving to exports. So I think this is the kind of story we have seen in power, and I think we'll be talking about a whole lot of these aspects in the discussion as we go ahead.
Dinesh, BSE Power Index is one of the oldest thematic indices in India. Could you take us through the reasons for its conceptualization and how is it managed today?
Sure, Karunya. So as you rightly said, the BSE Power Index is one of the oldest indices in the index universe of BSE indices. And in terms of the conceptualization of the index, just to give you a brief background, we have the 4-level classification structure of companies. And we identified those basic industries which are part of the power value chain in order to come up with this index. So that is how we conceptualize this index. Now, talking about the idea that led us to creation of this BSE Power Index. Power or electricity as we know it is a key component as part of the core industries, which is part of the index of industrial production, and it accounts for a 20% weightage in the index. It is a highly relevant indicator to see how the economic activity is trending in the country. As Mukul previously mentioned, there is a high level of correlation between the GDP growth of India and electricity demand trends. So all these factors, led us to believe that there is a need for creation of an index which will closely track those companies which are in the power sector. And this is how we came up with the idea of creation of the power sector index. Now, talking about the index methodology, I will just briefly touch upon how the index is managed on a regular basis at BSE. So, with the BSE 500 as the parent universe, we select companies which are part of these 4 basic industries to be included in the index. What are those 4 basic industries? First is power generation, power transmission, integrated power utilities, and power equipment and infrastructure companies. So once we have the initial list ready, we create the final portfolio of stocks and select the stocks in such a way that it ensures that 90% of the aggregate free float market cap of the eligible index universe is selected for inclusion. And that is how the final portfolio of stocks is constructed. So currently this index has 14 stocks in the portfolio. We have set the buffer at 2% in order to reduce the index turnover. The weightage of stocks is assigned based on their free float market capitalization. And finally, the index is reconstituted on a semi-annual basis and it's rebalanced on a quarterly basis. So that's a brief summary of the index methodology.
The power value chain has multiple moving parts, Dinesh. Could you shed some light on the value chain and how the power index tracks different parts of this value chain?
Sure, Karanya. So as you rightly mentioned, the power value chain does have multiple moving parts. So it is composed of companies that are mainly part of three major segments. First segment is the power generation companies. Second one is those companies which are into transmission and distribution. And the third segment is those companies which deal primarily with manufacturing of power equipment and infrastructure. So these are the three major segments which are part of the power value chain, which we have considered for inclusion in the index. Now, the index methodology has been constructed in such a way that all the stocks that belong to each of these segments will be considered for inclusion in the index. So the current portfolio composition of the BSE Power Index has a diverse mix of companies belonging to each of these segments. So in terms of weightages, the current portfolio weightage shows that about 39% of the weightage of the index is constituted of companies that belong to the power generation segment. Another 30% of companies belong to the power equipment and infrastructure segment, and the remaining 31% companies are constituted by the integrated power utilities and the transmission segment companies. So this is how the index is able to cover each and every segment of the power value chain. And the government of India has recently introduced several new policy changes and incentives for companies in the power sector. And these incentives have been designed to, benefit each and every company which are part of the different segments of the power value chain. So these introduction of these policy changes are meant to transform the power sector in order to cater to the rapidly rising demand in the power segment, which has been seen over the last few years. So that is how the index, makes sure that it spans the entire value chain of the power sector.
Dinesh, the power sector, while materially different from the energy sector, is often confused for the latter. Would love to get your take on how the power index is different from the energy indices, if at all.
So the power index is quite different from the energy index in terms of their methodologies. So the power index, as we have previously discussed, is constituted by companies which are part of the power value chain. And these are companies which are into the business of power generation, power transmission, and manufacturing of power equipment and infrastructure. And the sector classification of these companies falls either into capital goods or power. On the other hand, the energy index is composed of companies whose sector classification falls under oil and gas and consumables. And these are the companies whose business largely deal with upstream and downstream oil and gas production and similar allied businesses. So the revenue exposure of these companies is impacted to a large extent by factors such as changes in crude oil prices, changes in the refinery margins, etc. On the other hand, the companies which are part of the power index are more impacted by factors such as the changes in the supply-demand scenario of the power sector and any new policy initiatives or regulation changes introduced by the government in the power sector. So that is why the power and the energy indices are clearly different, and their methodology of creation is also different from each other.
While the power value chain is pretty comprehensive, it also has undergone a transformation. And today, renewables have become a major force as well as a priority for clean energy transition. How does the BSE Power Index capture this transition, Dinesh?
So that's a very good point, Karamya. So the BSE Power Index includes companies part of the power value chain, and one of the sub-segments of the power value chain is the renewable segment. So the renewable segment has been into the focus and has seen increasing importance over the recent few years. Just to give you a context of the same, the renewable segment generation capacity grew at a CAGR of 20% over the last 5 years. The current installed capacity from renewables is currently standing at to 27 gigawatts. And the government has set a target of taking the renewables-based power generation capacity to 500 gigawatts by 2030. So that's the kind of expectation the government has and the impetus it's placing on the renewable segment. Besides, 83% of all investments that came into the power sector in 2024 were towards the renewable segment. So all this shows that the renewable segment is has remained in focus and will remain in limelight for the, coming few years. Another point I would like to add over here is that the government has recently introduced a lot of policy changes and initiatives and incentives targeting the companies who are aligned towards the renewable segment. So some of these incentives are more focused on the PLI side of things, PLI based schemes, which impacts the profitability of companies and incentivizes them to, cater to the renewable segment. So these are some of the developments that we have seen in the renewable segment in the recent few years. Talking about the index, the BSE Power Index. So the BSE Power Index has a good mix of renewable companies. In terms of weightage, about 17% of the index composition is constituted of companies which are pure play renewables in nature. Another 34% weightage is constituted of companies whose revenue exposure is a good mix of renewables and conventional based power generation. So put together, about 50% of the weightage of the index comes from companies who are having a meaningful exposure towards the renewable segment. So in a way, we can say that this index is a good proxy towards the renewables theme. So that gives you a brief, good idea about how the index covers the renewable subsegment of the power value chain.
Mukul, as we had earlier discussed how the power sector has both grown and transformed, has this reflected in the business fundamentals of the constituents?
So about that, Karunya, since the sector has grown a lot, and a sector the size of power sector would absolutely see that play out even in the fundamentals of the companies, the largest players within that particular sector. So when we started looking at the constituents of the index, the BSE Power Index, we realized that this growth and transformation has clearly reflected in both the top line as well as the bottom line. We looked at numbers between FY20 and FY24, and we saw that the top line of the companies which are a part of the BSE Power Index has grown almost 2x. So it was close to 2,17,000 crores in FY20, and by FY24 that number was closer to 4 lakh crores. But the real kicker is in the kind of profitability these companies have seen. So while the revenue grew by almost 2 times, the profitability grew by more than 3 times. So the numbers that were closer to, I think, 20,000 crores in FY20 were upwards of 60,000 crores in FY24. So clearly there was a reflection of the growth and transformation of the sector in the fundamentals of the companies which were a part of the BSE Power Index. And sure, that has to happen when a major sector like this undergoes this kind of a transformation, be it from government support as well as the market forces at the time.
Dinesh, how has the performance of the index been vis-a-vis broader market indices?
To answer that question, Karunya, I would say that as we have discussed in this discussion earlier, the power sector index, the overall outlook of the power sector has seen a transformation, and it has, improved significantly over the last few years. And all this has reflected in the power sector, BSE Power Sector Index performance also. So talking about the power sector index performance, it has outperformed its parent BSE 500 universe across longer time frames, and it has shown 5-year CAGR returns of 37%, which is significantly strong performance. And when we talk about the index from a size segmentation perspective, about 70% weightage of the index is constituted of stocks that are part of the large cap segment, and another 30%, the remaining 30% belong to the mid cap segment.
Mukul, the Groww Mutual Fund has recently introduced 2 schemes based on BSE Power Index, the Groww BSE Power ETF and the Groww BSE Power ETF FOF. NFOs for both the schemes are open till 1st August. Mukul, can you give us some more details about these schemes?
Sure, Karunya. But before we talk about the schemes themselves, I wanted to touch upon something which is a little more important. So, since we talked about the growth of the power sector, how it has transformed over the past 2 decades or so, and Dinesh also touched upon the kind of government support it's getting, one might be tempted to think that a whole lot of what was supposed to happen in power sector has already happened. And why would it still be an interesting sector for someone to invest in? So we dug deeper into the sector to see what, even though there has been a lot of change, what are the drivers that can probably drive the next leg of transformation and growth within the sector. And we were able to identify a few things. Firstly, and very importantly, we realized that India in the year 2000 had a rate of electrification of about 60%, which means almost half the country had not been electrified. But by year 2021, India achieved near universal electrification. So in the year to 2015, we crossed the global average, and by 2021, the rate of electrification in India was 99.6%. We believe as this access starts to turn into usage, certain areas which were previously unserved would really be one of the factors which would drive the demand for electricity in the country. At the same time, when we started looking at how India stood in terms of per capita consumption compared to global counterparts, we realized that India's per capita consumption in the year 2024 was 1.42 megawatt hours, whereas the world average stood at 3.78 megawatt hours. So India's per capita consumption was almost 40% of the global average. Again, there is a lot of headroom as the Indian economy grows, as demand for electricity increases. This number is expected to expand to a much higher value, and some projections put this growth at about 2.6 megawatt hour by the year 2035. So within a decade, we are expecting a near doubling of the electricity demand within the country. And finally, we realized that while there are a lot of devices and avenues where electricity is already in huge demand, the emerging technologies have electricity at their heart. So two specific technologies that I wanted to highlight. One is electric vehicles. So we are already seeing an electrification of the fleet within the country, and government is also very ambitious about it, and they have a target of 30% EV penetration in passenger vehicles by 2030. And while this 30% itself is a very high number, this number is even higher for commercial vehicles and buses. So commercial vehicles, I think they're at 70%, and buses they're at 40%. So there is a target for EVification by the government of India, as well as there's been a general market adoption as well of the electric vehicles within the country. So we believe this will be a very big driving force. In 2024, the power consumption of EV was below 1 terawatt hour. By 2032, we are expecting this number to go up to 38 terawatt hour. So that's a huge jump. The second big driver for this for power demand globally as well as domestically is AI. So we are also looked at how the power demand for AI has changed over the last few years that it's been in presence. And what we saw was that AI is a huge power guzzler. So today, data centers in India are about 0.5% of the total domestic demand. By 2030, we are looking at about 3% of the domestic power demand being driven purely by data centers. So with universal electrification, low power per capita power consumption that has a headroom to grow, and emerging technologies, this trinity can be an interesting driver of power demand even going forward. So it's not a sector which has transformed and grown and has now kind of come to a stagnation. This is a structural story that we are seeing would probably continue to grow for the foreseeable future. So that's on the kind of outlook we have been able to deduce based on the research we have done and based on the projections available and the data available in public sources. Now coming to the ongoing NFOs, we at Groww Mutual Fund believe in providing simple structured investment options for investors who would want to gain exposure to specific themes or sectors they would be interested in. We have two ongoing NFOs right now. One is for the Groww BSE Power ETF, and the other is for the Groww BSE Power ETF FOF. As far as the ETF is concerned, it can be invested in similar to how one would invest in a stock on a stockbroking platform. The Groww BSE Power ETF tracks the BSE Power Index and invests in companies in the same weightage as the index, barring minor tracking errors. As far as the ETF FOF is concerned, it follows a mutual fund structure and would be preferred by those investors who prefer an MF structure in their investments. The Groww BSE Power ETF FOF invests in units of the Groww BSE Power ETF, and both the schemes provide exposure to the broad-based power sector within India. The NFO started on 18th of July and is closing on 1st of August. We advise that investors must consult their financial advisors before making any investment decisions in these two schemes, as the nature of these schemes is sectoral.
Thanks so much for joining us today, Dinesh and Mukul. So that was everything you needed to know about the BSE Power Index, an index that captures the performance of some of India's power sector companies across generation, transmission and distribution. To help investors tap into this theme, Groww Mutual Fund has introduced two schemes, the Groww BSE Power ETF and the Groww BSE Power ETF Fund of Fund or FOF, both of which track this index. The NFO period for both schemes is open till 1st August 2025. As always, please consult your financial advisor and read all scheme-related documents carefully before investing. Until next time.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.